Hi everyone. So as many of you might have known, the US stock market hit a record high a few days ago. It subsequently came down a little bit, but nevertheless it's trading at near highs. And the question that a lot of people ask is it worth it? If markets are hitting a high, is it actually worth investing? And it reminds me of a conversation I had a few years ago with this self-made billionaire who became a millionaire in his early 40s. He only had a middle income. But he joked to me, he said, you know, Adam, if I would have known that when I started investing, markets were at a record high, I would have never started to invest. In other words, he started investing when the Dow was at about 2,000 or 2,500 in the early 90s. And that was much higher than it was in the 80s, 70s and 60s. But of course now the Dow's at pretty much 27,000. But he admitted that even though what he knows now, he knows there was nothing to worry about the Dow being at 2,500 or whatever it was when he started to invest. It would have worried him if he would have known at the time because he didn't have the knowledge. And at the end of the day, if you look at any long-term graph of the Dow, or indeed the S&P or our main indexes, markets do tend to always hit all-time highs. Not every single year, but just look at recent years. They've hit a high last year, the year before, the year before, the year before. Every year, the last 9 years or so. Even last year, even though markets were down, they did briefly hit a high. And then it was 6 or 7 years before the economic crisis. So the point is, markets don't hit a record high every single year without exception. Occasionally, or even take 5 or 10 years, where markets don't hit a record high, for example, after the economic crisis or whatever. But eventually, they always hit a high, and actually, more often than not, they hit a high every year or every 2 or 3 years. So I wouldn't actually worry about it. Just Google, the closing milestones of the S&P or Dow Jones or whatever. And by the way, if markets do ever go down for 5 or 10 years, just think about it as an opportunity. You're just buying business, business income, which is essentially what the stock markets are at lower prices. Or put it another way, if you start investing now for 20 years or 30 years, and the first 10 years you get disappointing returns, then you get good returns. That's far better than getting good returns at the start of your investment because of the way compounding works. So never worry about the short terms of the market. And remember, markets do tend to hit all-time highs, so don't worry about it when these things happen in the same way you shouldn't worry about it when markets fall. Okay, everyone, hope that's useful.